Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 26th CO2 report of 2018. And as usual, we're going to start off with the changes in commercials positions, starting with copper, which is on top of our list with a 39% change in commercials positions, 38 in large speculators. You can see these changes are definitely much greater changes than average, possibly the largest change in the past 52 weeks. This is the time range that we're looking at right now. It is a bullish COT change signal coming at pretty decent support levels. So all this is suggesting there may be a bit of a rise in the market early next week. Here you can see a 5-year chart of copper where we can more easily see if there is a COT extreme or not. Well, basically just 2 reports ago, we've been at a very significant bearish extreme level. You can see there was a sudden drop in prices. Of course, bullish extreme levels are pretty far away, so this bearish extreme that was in the market may actually be pushing prices in the medium or long-term downwards. We could see even lower prices coming. So that's that for copper. Moving on to the Canadian dollar, where we have a 32% change in commercials positions. You can see that change over there. Pretty large changes, actually. This is a bullish COT change signal suggesting prices early next week could further rally. Maybe the timing of this signal is not the best because there has been a bit of a rise on Friday. Jumping to this 5-year chart, you can see how extreme the market is. Slowly, steadily, we are getting closer and closer to bullish extreme levels. You can see that the last major extreme back over here in the second part of 2017, we had this pretty decent bearish extreme in the market that pushed prices down. And as the price of the Canadian dollar decreased, you can see that the extreme decreased with it, and it's actually becoming more and more extreme towards the bullish side of the market. The next market is lumber with a 21% change in commercials positions. You can see that change over there. This is again a bullish COT change signal suggesting a bit higher prices coming early next week. A 5-year chart that I'm just showing you will show us a relative extreme, a 42, 41 report extreme in commercials and large speculators. Not that large. You can see that back over here in 2015 we had this huge bullish extreme just when the market reached its bottom on this 5-year chart. You can see that quite clearly, and since then the price of lumber has increased rapidly to very high levels. And now after we have these bearish extremes, and you can see there has been a very decent decline in the price of lumber, we have moved away from that bearish extreme level. Moving on to large speculators COT extreme, platinum is on top of our list with a all-time COT extreme in large speculators. Currently you can see still both large speculators and commercials being net short. Small speculators are the ones taking the long side of the market, which is quite interesting. Nevertheless, it's an unquestionable bullish COT extreme that we have, suggesting higher prices to come in the medium to long term. Of course, this trend in the COT report could continue. We may see even greater extremes coming in the next couple of weeks before the market reacts. Soybean oil is our next market with a 228 report extreme in large speculators. The same size extreme is visible in commercials. Again, this is a bullish COT extreme. You can see on this 5-year chart, the last time we had a similar extreme was back over here, early 2017. Again, is a good signal. Soybean markets are usually pretty precise with the COT signals. You can see an example from mid-2016, and there's a few more examples. If you scroll back, of course, here you can do that. So basically, it's a bullish extreme suggesting a change in the trend coming soon. We may need to wait for that another couple more weeks, but eventually the report is telling us it will be coming. The last market for this review is the euro with a 58 report extreme in large speculators. You can see that we're moving away from this bearish extreme that has been present in the market early this year for quite some time. Actually, you can see that eventually prices have reacted, and you can see there was a drop in the euro, and following that the extreme simply decreased from its bearish extreme, and slowly, steadily seems to be going towards the bullish side. So this basically means that we're in between two extremes. If this trend continues, then we could easily see further decline of the market. We'll see what happens. One thing's for sure, for 58 weeks or 58 weeks ago, which is over a year, is the time when we had such an extreme in the market. So that's a bullish extreme. Thank you very much for watching this review. I hope you enjoyed it. Next week, I'm not going to be here, taking a bit of a holiday. So in 2 weeks' time, hopefully you'll join me again at cotbase.com. And have a great weekend. Take care then. Goodbye.